Hello dear students, welcome to the discussion. As I promised you certain practice tests, we need to discuss their answers. The discussion got little delayed because of unavailability of digital board, so it is coming a bit late to you, but nonetheless it is within time and you will get a lot of benefit from this practice. Now, the question number 1 is, consider the following statement regarding the forex reserves. So all of us are aware of forex reserves that are maintained by which organization, by the way? They are maintained by RBI. Now, forex reserve comprise of foreign currency assets and special drawing rights only. So in this case, since we have been given only, this is wrong. It can't be only, because there is more to it. So there is credit tranche, there is reserve tranche, there is gold, and there is lot more. So we definitely have a lot in the forex reserve, and it is not just the foreign currency and SDR. So first statement is wrong. Second, an economy's reserve tranche in the IMF is not a part of its forex reserve. This is also wrong, because it is actually part of the forex reserves. Now, what is reserve tranche? That we need to understand very briefly. So every country has to keep certain money with IMF, and that is how the SDR is created. The Special Drawing Rights Fund, SDR fund, that IMF has is created. Now, for example, let us say India has to contribute about 2.8% of the total SDR fund as per the quota formula. Now, 2.8%, let us say, of SDR fund would be almost $17 billion. Now, $17 billion that we give to IMF, out of that about 25% is considered reserve tranche. That is a reserve position of India. We can always get that money whenever we need. Even a permission is not required. We just need to notify IMF and we can use that money. So this money is always available with us, as in whenever we need it. Okay, so reserve tranche is always available. We do not have to pay interest. It is our own money, and up to a certain amount we can always withdraw and use if we need that. Now, beyond reserve tranche, IMF has additional facilities. For example, after that there is credit tranche. Remaining amount of the SDR contribution you can withdraw as a part of credit tranche, on which you have to pay very low interest. And then beyond that, the IMF has extended credit facility, extended funds facility, etc. So IMF has a lot of components in its support to the member countries. Reserve tranche is the most basic and the free support in which we are able to withdraw what we have contributed. Okay, so, and it is part of the forex reserves because it is always available to us, so we always count that in our reserves. So next question, which of the following best defines the concept of the balance of payment? Now, when we talk about the balance of payment, we need to understand that BOP is an account of a country. Everybody is included in that, whether it is government, corporation or common household. Everybody is involved. I order something from abroad, even if it's a book, if it has to be imported from abroad, then it will feature in the BOP, because as soon as some transaction is there in forex, the transaction get recorded in the BOP. Now, which of them is closest to the BOP as a concept? It records the transaction in goods, services and assets between the resident of a country with the rest of the world for a specific time period. This looks perfectly all right. Goods and services both are included. These are in the current account of the BOP, and assets are in the capital account of the BOP. So yes, any resident of a country can require that, okay, can send abroad, can receive from abroad. Next, it records the transaction in goods, services and assets between the citizen of a country with the rest of the world for a specific time period. It can't be citizens, because when we say citizen, even NRI are Indian citizen, non-resident Indian, they're still Indians, they have Indian passports. So those people do not contribute to our forex because their demand is from other countries. They are Indian citizen, but they live in some other countries, and hence they should not be considered. I mean, when we say citizen, those are also included. That's what I'm saying. And for example, there are many foreigners who are living in India, and they affect our BOP as well. If we say citizen, even they will be excluded. So it can't be citizens. C, it records exports and imports in goods and services and transfer payment. This is correct, but this is incomplete. The first statement is more complete because it talks about both current and capital account. This talks only about the current account. D, it records the net export level of goods and services and transferred payment. It's the same thing. C and D are roughly the same. Okay, net export means export minus import. So that also is absolutely correct. That is included in the BOP, but this is not the best explanation of BOP. A is the best explanation, and that should be the answer. Next question. Consider the following statement regarding the current account deficit. Now, current account deficit is also about BOP current account. Okay, it occurs when a country spends more on imports rather than on exports. Yes, it does occur then. The current account includes net income, including interest, dividend and transfers such as foreign aid. So yes, current account also includes the transfers. So what about 3? In 3, we have both of the statement as correct. Okay. So perfectly all right, both the statements. So when we talk about current account include the income from selling services, selling goods to other countries, and expenditure on buying goods and services from other countries. Apart from that, factor income transfer is also there. So for example, I have an apartment in St. Petersburg, and from that apartment I earn a monthly rent which is transferred to India, and due to that rubles are transferred, which I convert into rupee, or which are automatically converted into rupee for me, but those rubles ultimately go to RBI for that transaction. So that is why it is in BOP. So all of that is part of BOP current account. Now, fourth question, ETF is a basket of securities that can be traded on a stock exchange. In this regard, consider the following statements. The return and risk on ETF are directly related to underlying index or the asset it tracks. So first we need to understand ETF very briefly. When we say exchange traded fund, it is basically a type of mutual fund which you can buy and sell through the stock exchange. They themselves are also listed on stock exchange. So it is very easy for people to enter in and take exit, and you do not have to pay maintenance fee, you do not have to deduct charges. So all of those benefits are there compared to the traditional mutual funds. So ETF are becoming very popular now. So first statement is perfectly correct. The mutual fund as a concept is in weighted average index, is a weighted average. So for example, I want to invest in gold, I want to invest in silver, I want to invest in platinum and other precious metals. Now I create a portfolio or a fund of 1 lakh rupee, 20,000 I invest in silver, 40,000 I invest in gold, 20,000 I invest in platinum, another 20,000 I invest in some other materials. Now the weightage of gold in my fund is 40%, the weightage of platinum and silver is 20%. If platinum price increase, my portfolio increase by 20% of that value. So that is how the mutual fund work. Now instead of this, you can also have certain stocks, you can have certain bonds. Now that unit itself, for example, my 1 lakh rupee, now I divide into stocks that anybody can become partner with me. So if anybody wants to give me 40,000 rupee, I will give 40% ownership of this fund. So likewise, it can become tradable. So that is the concept of ETF. I hope it is clear. Second, Bharat 22 is the first ETF. So that particular statement is wrong. It is not the first ETF. There has been an ETF earlier also. So for example, there was CPSC ETF in 2014 before Bharat 22. Bharat 22 is an ETF, exchange traded fund, in which 22 public sector companies are chosen, and in those 22 public sector companies, your money is put. So in this case, it should be one only. Okay. Question number 5. Which of the following pairs are correctly matched? Flexible exchange rate, interventions by the government. Okay, let us see. Fixed exchange rate, currency peg. Managed exchange rate, market driven. So interventions by the government are there in managed exchange rate. If we say flexible exchange rate and there is no other term attached, we call it market driven rather than intervention by the government. So 1 and 3 should be interchanged. The second is correct. Currency peg means we have fixed the value against a particular currency. That is what it means. So in the fifth, it is B, 2 only. 1 and 3 should be interchanged. Okay. Sixth, with reference to primary deficit, consider the following statements. It is the difference between the fiscal deficit of the current year and interest payment made on the previous borrowings. Okay. Second, zero primary deficit can indicate government has resorted to borrowing only to pay off the interest payment. This is also correct. A low primary deficit is not good for the fiscal health of the economy. This is wrong. Now let me explain them a bit. When we say primary deficit, the purpose is that we want to see from scratch if there is no past loan, then how the budget would look like, how the account would look like. So on the past loans, since we have to pay interest, if we remove that interest component, that would show how our current spending is. So we remove the interest payment on the previous loans and then we see how much is the deficit. So for example, fiscal deficit is 3% of the GDP. But on my past loan, for example, debt to GDP ratio, okay, fiscal deficit is, let us say, 4%. And debt to GDP ratio, that ratio is about 60%. Okay. Now, on this amount, you have to pay interest. Okay. Let us say on this amount, you have to pay 3.6% of the GDP as interest. Now, you remove 3.6 from 4 and that is how you get the primary deficit. Okay. 4 minus this, and that will give us the primary deficit. So that will be 0.4% of the GDP. So that is how we calculate it. So first statement is correct. Second, zero primary deficit can indicate government has resorted to borrowing only to pay off the interest payment. So it is zero when the interest on the old loan is exactly equal to fiscal deficit, and fiscal deficit is same as borrowing. Means if there is no past loan on us and we do not have to pay interest, then technically we do not even have to take a loan today. That is what primary deficit in this case means. I hope you are understanding. Let me simplify it in Hindi also once. अगर हमारा प्राइमरी डेफिसिट ज़ीरो है तो इसका मतलब ये है कि हमने जो पहले लोन लिए हैं उनका जो हमें इंटरेस्ट देना है उसी के एग्जैक्टली बराबर हमारा फिस्कल डेफिसिट है, एंड दैट इज इक्वल टू बोरोविंग. तो अगर हाइपोथेटिकली अगर हम ऐसा मान ले कि पुराना कर्ज या पुराना लोन हमारे ऊपर ना होता और उसका ब्याज या उसका जो ऋण शुल्क है वो हमें आज ना देना होता, तो हमें आज उधार भी लेने की जरूरत नहीं थी क्योंकि बाकी खर्च हमारा बराबर है. तो ये मीनिंग होगा यहाँ सेकंड स्टेटमेंट का. सो एग्जैक्टली इट इज करेक्ट. देयर इज नथिंग रॉन्ग हियर. इट कैन इंडिकेट गवर्नमेंट हैज टू बोरो just to pay the interest. Okay. So primary deficit should be as low as possible. Okay. High primary deficit means we are borrowing more than what we have to pay, which is not a good sign. That means we are increasing the debt to GDP ratio. If primary deficit is zero, your debt to GDP ratio will never increase, rather it will decrease. So that is the good thing with debt to GDP primary deficit. That is how it is useful. A low primary deficit is good, and if primary deficit is negative, it means debt to GDP ratio will go down. That means our loan burden will decrease in the long run. So that is all about it. Third, a low primary deficit is not good for the fiscal health. This is wrong. Answer should be B. I've already explained the third part. So answer should be B here. Question number 7. Which of the following statement are correct regarding the transfer payments? They are receipts which the residents of a country receive for free without having to make any present or future payment in return. Okay. Transfer payment we understand, where nothing has to be provided in exchange. I get money but I do not have to perform anything. I do not have to give anything for that money. That is transfer payment. Okay, gift is a transfer payment, for example. Now, receipts which residents of a country receive for free without having to make any present or future payment in return. That is correct. It is a tool to redistribute income and wealth in an economy. It is all possible because subsidies are very good example of transfer payment and government use it to redistribute income and wealth. Third, remittance, gift and grant and government subsidies are considered as transfer payments. That is also correct. Remittances, gifts, grants, all of these are given and in exchange nothing is taken. So that is all correct. Fourth, it is included under revenue expenditure while calculating GDP. Now there is something interesting. Yes, it is included under revenue expenditure. That is correct. But what about GDP? First of all, in GDP we do not have to talk about revenue expenditure. This is incompatible. Revenue expenditure we talk about when we talk about government budget, and otherwise also if we talk about GDP, in GDP we include only production when something is produced, and since in this transaction no product or services are produced, only money is given, no transfers are included in GDP. So fourth statement here is wrong. It should be C, 1, 2 and 3. Question number 8. Which of the following statement regarding the BOT, balance of trade, are correct? Balance of trade is a sub-component in the current account of BOP. It refers to the indifference between monetary value of a country's import and export of goods and services over a given time period. Okay, difference between monetary value of imports and exports. So that is exactly the balance of trade is the difference between the net export earning and net import expenditure. Second, it is a component of the current account of BOP. I already told that a positive BOT necessarily indicates a healthy economy. Now this is wrong. The third statement is wrong here. There are many countries where they sell away their natural wealth, and because of that they have a lot of exports. There are many countries in Africa which export a lot of mining products, but that doesn't mean they have a healthy economy or a healthy system. So it does not necessarily indicate a healthy economy. That is why the third part is wrong. It should be A, 1 and 2 only. So this is question number 8. Question number 9. With reference to the fiscal deficit, consider the following statements. It is the difference between the government's total expenditure and receipts excluding the borrowing. We are talking about fiscal deficit. Okay, fiscal deficit is basically the difference between expenditure and receipts, but for that we keep the borrowing out. That is why fiscal deficit is actually equal to borrowing. The first statement is correct. Okay, see, total expenditure is always equal to total revenue. Now out of the receipts we remove the borrowing, then the difference between the total expenditure and revenue, in this case if we remove the borrowing from that, will exactly be equal to borrowing. Okay, so for example, A is equal to B. This is total expenditure, this is total revenue. Now they are always equal. In the budget we always have to balance. Now in this case we say out of the earning or total receipts we remove something, we remove a component C. Okay, now we say the fiscal deficit is equal to B minus C, where C is equal to borrowing, minus A, the expenditure. This is equal to fiscal deficit, and B and A are equal to each other. So this is will be equal to B minus C minus A, and B and A will cut with each other, and we have C, which is technically the fiscal deficit and also the borrowing. Hence fiscal deficit and borrowing are same thing. So the first statement is correct. Second, monetized deficit is part of the fiscal deficit financed by the central bank. That is correct. If central bank pay government some money, basically central government never pay government any money for deficit. Central bank never buy the government bond. Central bank only, in our case RBI only arrange the sale of bond to the other banks and financial institution. RBI itself never buy the government bonds. So that is why central bank never finance the deficit. But in case central bank finance the deficit, then new money will come into economy, and that is why we call it monetized deficit. Let me simplify again. अगर आरबीआई बाकी बैंकों को बॉन्ड बेचकर वहां से पैसा अरेंज करके सरकार को देगा, तो पैसा इकोनॉमी के अंदर ही सर्कुलेट हो रहा है. जो पैसा पहले बैंकों के पास था उनको सरकार ने बॉन्ड दिया और बैंकों के पास से पैसा सरकार के पास आ गया. आरबीआई इस सारे सिस्टम को फैसिलिटेट कर रहा है. सो देयर इज नो न्यू मनी. इस सारे सिस्टम ने हमने नया पैसा सिस्टम में नहीं डाला. वी हैव नॉट एडेड मनी. सो मनी इज सर्कुलेटिंग विद इन द सिस्टम. बट in this case, if RBI creates extra money, RBI buy the bond, then banks have their entire money and extra money is going to government. That increases the money supply, and that is why we call it monetization. Okay, when government reduced the money supply, it made certain notes not acceptable. That was called demonetization. If we increase money supply, we call it monetization. That's why we call it monetized deficit. So that is correct. Third, India's fiscal deficit has consistently increased since the last decade. That is wrong. There is no single trend. It has increased and decreased continuously. Okay. So in this case, it should be the 1 and 2, A, for question number 9. Yes. Question number 10. Consider the following statement regarding the currency appreciation and depreciation. If a government sells sovereign bonds, it can lead to currency depreciation. Okay. If government is selling the sovereign bond means they are being sold in international market. Government bonds are typically not discussed as sovereign bond if they are traded within the country. Generally, by indicating them as sovereign bond, we means that government is issuing bond in the international market in this case. Okay. So if government is selling extra bond, what will happen? More money, more foreign exchange basically in this case, because we are selling bonds in international market, more foreign exchange coming into the country. And when more foreign exchange come into your country, your currency should appreciate as a immediate result. In the long run, we do not know what will happen. In microeconomics PT question or in such macroeconomics PT question, you are talking about the immediate result. Immediate result will be we get foreign currency, and as a result the demand for rupee increases and supply of foreign currency increases, and rupee should appreciate, not depreciate. So first statement is wrong. 2, a surplus in the current account can cause the depreciation of the currency. Typically when there is surplus in any of the account means we are getting more money from abroad, more foreign exchange, and that should also appreciate the currency. Okay, appreciation happens when we get more foreign exchange from abroad, and depreciation happen when we give away more foreign exchange. Okay, when we get more foreign exchange, what happens? The supply of that forex increases in our market. So in our market there are more dollars, and hence their value decrease because supply is more than the demand perhaps. Okay. Similarly, when we give away too many dollars, then the supply from the market decreases, and that increases the value of dollar. Hence we have depreciation. So when we are getting dollar from abroad, it should appreciate, not depreciate. So that's why both statements are wrong. Question number 11. Which of the following statement regarding sterilization by RBI is or are correct? So sterilization is a type of open market operation. In open market operation, government or basically RBI sell the bonds in the market or buy the bonds from the market. It is a process by which the RBI takes away money from the banking system. Okay. Second, sterilization is usually done to stem the negative effects of foreign capital inflows and outflows. So second statement is perfectly correct. It is done to address the negative inflow and outflow. Generally, we use the term sterilization for open market operation when we are dealing with foreign exchange bonds, when we are supplying more foreign exchange in the market through them. So typically when there is shortage of dollar, RBI supply more dollar in the market to support the domestic currency. Okay, so that part is correct. It is usually done to stem the negative effect, means to address, to reverse the negative impact. So negative impact should be reversed in this case. That statement is correct. Now the first statement, it is the process by which RBI takes away money from the banking system. So in this context, they mentioned this term only in the case of OMO, simple standard open market operation. In that context also it is correct. Okay. Both statements are correct. Although this statement is not perfect, okay, takes away money, because it can be supplying more money as well. It is not just takes away the money, but it is not written RBI takes away the banking system, money from banking system only. I mean, it still leaves the possibility of giving money. Okay. 12th, with reference to National Infrastructure and Investment Fund, consider the following statement. It is an alternate investment fund governed by the RBI. RBI will never govern any such fund, by the way. RBI is not looking into capital market, and whenever we talk about any fund, okay, whether it is a fund of bonds, whether it is a fund of stocks, it is always about capital market, and it is SEBI which deals with the capital market, not RBI. Okay, so it is not RBI, it can't be RBI logically. Second, only domestic institution and investors are allowed to invest in master fund of NIIF. This is wrong, because Abu Dhabi has already invested. Okay, so basically there is a fund that we have created. Now in that fund, from different sources we contribute money, we add money to that fund, and from that fund we make investment in certain areas, we make more money, and that is how the fund grow over time. And earning from that fund can also be invested in the infrastructure and also some public sector companies. So that is why it is called investment and infrastructure fund. Okay, the strategic opportunities fund in India focused private equity fund. Now this is something very clearly factual. Okay, so this in this case is correct, so it should be 3 only. Okay, I do not have to explain much about it, but first two statements are wrong. It should be have been SEBI, and foreign investors are also allowed. 13, it is about FDI. First, FDI in India was allowed after the BOP crisis of 1991. So that is correct. Okay, before that FDI was not allowed, and it was very, very restricted, and through only the government approval, very selective cases of FDI were there. Okay, so they were not allowed. They were allowed only after 1991 in a general way. Second, FDI inflow are component of capital account of BOP. That is correct. I told you assets, investments are in capital account of BOP, and transfers and trade and income is in current account. Third, India does not allow any FDI in state-run oil and gas companies. This is wrong, because this has also been allowed. Now there can be FDI in state-run oil and gas companies, and in fact there has been investment in ONGC and some of the other government companies. Okay, so we have 49% FDI permission. So third statement is wrong, 1 and 2 are correct. 14th, with reference to the IMF, consider the following statement. It tracks the economic development and lends to the countries that experience the BOP crisis. That is correct. Okay, it tracks means it keep measure of economic development. So IMF publishes report, IMF give a forecast how much a country will grow this year and all of that. So that is there, and it also give loan to different countries, okay, which have the BOP challenges. So that is also there. Second, quotas in IMF are based on a country's relative position in the global economy. That is also correct, because there is a quota formula. In fact, very briefly I will mention that formula. So it includes the GDP of that country. Okay, within GDP we have two measures. We have the nominal GDP and we have the PPP GDP. So GDP has 50% weightage. So what you have to contribute to the IMF depends largely on your GDP itself. Then there is forex reserves. Okay. So out of the total global forex reserve, what percentage you have, on that basis every country gets score, and this is 5% weightage. Similarly, there is openness index. Okay, that is 30%. Okay, and then there is macroeconomic variability. So macroeconomic stability we are measuring with that. That has 15% weightage. So it all depends upon our performance compared to the other countries in the world or in general. So that is how we are allotted quota. Quota are given on the basis of formula. Third, it publishes global competitiveness report to assess the state of the economic competitiveness of the countries. So IMF do publish a lot of report, but this report is not published by IMF. IMF doesn't publish competitiveness. It is not even a domain of IMF, by the way. This is published by World Economic Forum. 15th, with reference to the National Committee on Trade Facilitation, NCTF, consider the following statement. Now this is a pure factual question. This you could have done through the hint itself. I do not really have to discuss this question. So hints should have given you adequate detail. Okay, in this case all answers are correct, so it is D. 16th, consider the following statement regarding the WTO. First, it is a specialized agency of the UN. This is wrong. WTO is completely outside the UN framework. Second, de minimis provisions allow developing countries to maintain amber box subsidies to a level of 5% to the value of agriculture output. This is wrong, because developing countries are allowed actually 10%, so they can give more subsidy. It is developed country which can give up to 5% subsidy. So this second statement is wrong. Third, it is headquartered in Geneva, Switzerland. That is correct. WTO's, I would say, the bureaucratic structure is entirely situated in Geneva. So that is how it operates. So the first statement was correct. Answer should be C, 2 and 3 only. The first statement was about UN agency. It is not a UN agency. 17th, both NEER and REER are used as indicator for external competitiveness. External competitiveness basically means at what price we are able to export our products. Okay, so our exchange rate also determine at what price our products are going abroad. So REER is a better measure because it also factors in the price change in the country, okay, compared to the other country. So both nonetheless measure external competitiveness. Second, it reflects the quantity of domestic goods required to purchase 1 unit of a given basket of foreign goods. That is correct. Okay. REER, basically it is real exchange rate, so it is not based upon the idea of currency to currency. It is based upon how much products I need to give in order to get a product from abroad. For example, if REER appreciate, it means for the same amount of products I have to export less now. If REER increase, okay, that means REER appreciates. That is what I am talking about. And if REER decrease, it depreciates. It means we have to export more products. Okay. So I hope I have not mixed it up. REER, if it increases, means the appreciation is there, and that means we have to give away less, we have to export less to import the same. And when REER goes down, means there is depreciation. It means we have to export more in order to get the same. So REER is actually a better measure of competitiveness. Third, a higher NEER. And by the way, when we say export less, export more, we are talking about the physical product, not their dollar value. Dollar value may be low or high. That we look at in NEER. In REER, we look at the how much product and services I have to give. Okay. So if I am exporting, let us say 9,000 ton of basmati rice, and REER gives me appreciation. That means I can get more products in exchange of that. Third, a higher NEER implies domestic currency is usually worth more than a foreign currency. That is correct. Okay. In this case, we have to talk about currency. NEER is about currency and REER is about products. So all three are correct, by the way. 18th, which of the following does correctly differentiate between FDI and FPI? Okay. FDI aims to take control of the company in which investments are made, whereas FPI aims to reap profit by investing in shares and bonds of the entity without controlling the company. That is perfectly correct. Okay. It is possible that we may only buy shares or bonds, but if they give us the controlling stake in the company, even that is considered FDI. Okay. So FPI is when you have no control over the decision making in the company. You just give them money and then company uses it as per their own conscience or as per their plan. So this is correct. B, FDI is generally for long run and FPI is for short term. So generally that is true. Okay. C, FDI is known as the hot money as it is stable in comparison to FPI, which is highly volatile and speculative. Largely correct. FDI is stable compared to FPI, which is volatile and speculative, but it is FPI which is called hot money for that reason, because hot air has more volatility, or any element, if we heat it up, it has more volatility. There will be more movement of the molecules, atoms inside it. It becomes volatile when we heat it up. So that is why, since it is more volatile, we call it hot. D, FDI has a direct impact on the employment output, whereas FPI affects the currency market and foreign exchange rate. The FDI has more direct impact on employment and output, that is correct, whereas FPI affects the currency market and foreign exchange rate. This is not properly correct, because it is FDI also which 100% also affect the exchange rate as well. But since we have to identify one incorrect statement here, okay, so C is incorrect because it was FPI which was hot money. D is not a perfect statement, but still it is largely correct. Nothing wrong as such is said. FDI has a direct impact on employment and output. Okay, but it also has a more direct impact on currency market and foreign exchange rate also. It's not FPI, FDI have the same impact on that. So we do not have a differentiation. But still, the statement itself is nothing wrong. Okay, it doesn't say FPI has more direct impact or something. FPI only effect should have been better. Okay, it should have been, whereas FPI only affects the currency market and foreign. So that is what should have been made it perfect, but nonetheless it is not wrong. C is wrong. 19. Consider the following statement regarding trade in services. So the trade in services include both factor income and net non-factor income. So when we say trade in services, we give away services, and against the services what we typically get is the factor income. Okay, and what do we mean by net non-factor income? Apart from factor income, there can be certain non-factor income as well. Okay, factor income is from the rent, from the salary, from the profits, from the rent. But in addition to that, can we have anything else in case of services? Do we have anything which is not considered to be either salary, which is not considered to be any of this, okay, which is considered as a factor payment? So that is the question. So yes, we do have non-factor payment as well. Generally it is very, very less, but there can be some transfers included in that. There can be, I mean, not technically transfer, but let us say there can be certain things like royalties, there can be certain things like other IPR, intellectual property rights, against which payments are made. Okay, some economists consider them to be part of rent, while some do not, and similarly there can be even other components. Okay, so there are some additional concepts nowadays. For example, I am giving service but I do not get anything in exchange of that. For example, I run a website which is free for all, but through that I get some advertisement income. So it is not directly in exchange of my services. Are you getting it? So that is how it will not give me direct factor income. So there can be something like that. Second, WTO, General Agreement on Trade in Services, is only set of multilateral rules covering the international trade in services. So do we have something like that? Yes. Okay. Question number 20. National Commission, this you can read with from the hints, this is purely factual. Okay. National Commission on Farmers Report, the very famous report of 2005, which was under Dr. Swaminathan. Okay. Next is about government e-marketplace, which was introduced to reduce the need for tenders for everything in government purchase. So it is a paperless and cashless marketplace for procurement of common use goods and services. That is correct. Okay. Paperless, cashless marketplace. Okay. And it is set up under the aegis of the Ministry of Finance. Now, this is what we need to identify, because such things can be very tricky. You know the concept, but specifically remembering all the factual detail, which ministry, which not. Okay. So that is sometimes difficult. In this case, it is not. Okay. Similarly, Swayat initiative aims to promote startup women, okay, through e-transactions on GM. That is correct. They are given some preference. Under that, startups are given some preference in the government procurement. So it should be 1 and 3 only, B for 21. Yes. Next is also factual. I have included them because such questions are asked by UPSC. So you should have good deal of practice with them. So I do not have to discuss this as well. Okay. And 23, I can discuss which of the following, because this is more logical. Which of the following is not a direct objective of the agriculture price policy in India? So under agriculture price policy, what do we want? That people get food at reasonable price, that farmers get good income. Okay. Now these are the type of common objectives. So ensure remunerative price for the farmers. That is absolutely correct. B, reasonable price for PDS. That is also correct. Reasonable open market price. That is price for common people. Okay. And price stability, that is of course correct. D, promote export of agriculture products from India. This is not part of the price policy. We do not price products so that they are internationally competitive, by the way. In fact, most of the government prices are more than the international market. Most of the MSP of Indian crops are higher than the global market prices. And that is a big challenge. Are we clear? That is a very big challenge, that we have to export, and yet we have to pay high price to the farmer also, and that makes products more pricey than the international competition. So if we try to price the products as per the international market, farmers will not get a good price. This is not a part. So D is the one here. 24 is about agriculture infrastructure fund. This you can check with the hint. Okay. So the answer in this case is both statements are correct. Okay. Just give me 1 second, please. Okay, let me see it. It is a central sector scheme, okay, under NABARD. That is correct. It is infrastructure fund after all. SHG and FPO are eligible to get funds under the scheme. Okay, that is also correct. All loans to be provided at 3% subsidy on interest rate. That is also correct, by the way. Okay, so it is D, 1, 2, 3. 25. Now we have to match the government scheme with the correct objective. Okay, PM Sampada, for example, if you remember, was about largely the food processing sector. Okay, green agriculture. Okay. So similarly, Operation Greens. So these are well-known schemes, and you should have been able to match these. Okay, in this case, it is pair 3 which is wrongly matched, because I already mentioned Sampada was about food processing, and that is not correctly matched here. Okay, so 1 and 2 are correct, but third was wrongly matched. I hope students that this discussion has helped you. This is the end of the test number 1. I will similarly hold another discussion for test number 2 and will upload it very soon. Now, I hope this discussion has helped you, and if you like the video, if you like the discussion, kindly like the channel, okay, and share the video, like the video. That would help me to spread the word about the channel. Thank you.